Welcome back to Opening Bell, getting you ready for the trading day. Michael Landsberg's with me, Chief Investment Officer at Landsberg Bennett Private Wealth Management. And so we're here. First, we got to wrap up this first half. I mean, I don't know that anybody thought, with all the tensions and all the tariffs in Iran and Russia and Ukraine, I mean, you had Gaza, there was so much going on, and yet it ended up being the best first half in 5 years, the best quarter in 6 years. Didn't expect that, did you?
No, I think part of what happens, Nicole, is like last year we had the tariff kind of tantrum and people overestimated the effect of the tariff. I think people just read into the negativity so much that anything that was positive was just an amazing surprise. And so we got a lot of rallies based on earnings. The earnings have been great, but I think people underestimated and got caught up in kind of the geopolitical, what's going to be the next shoe to drop.
Right.
And missed kind of the fundamental story.
And so the fundamental story is what you're looking at. I mean, you're talking about earnings that have been looking good. What's your outlook for the second half of this year?
I think it's going to continue to remain strong. I mean, we're coming off, the second quarter will be our seventh straight double-digit earnings growth in the S&P. It's actually accelerating. We think we're going to see 25% this quarter versus 18. And I think it'll continue. I mean, there's going to be some chop along the way, no question. But the environment right now is really good, obviously, with what's going on in the world. If that starts to go away, that should be a boost to what's going to go on. But we think that'll go no matter what.
Yeah, you spent a lot of time talking about the high beta names versus the low beta names. We think about high volatility, and sometimes with those high volatility names, you can have growth that looks great, but you got to take it with some risk. What are your thoughts on those types of names versus the others?
Well, I think what happens with those, one of the advantages of high beta names with this volatility is you're getting opportunities to step in and buy things. I mean, I'll give you an example on Micron. June 3rd, it was like almost $1,100. A week later, it's $850. A week later, it's $1,200. So if you're taking the opportunity to buy some names, keep a list that you want and look for this volatility to help you buy. Don't have to chase things because they're going to come back. Most stocks will give you the opportunity to come back and be able to add to positions or establish positions.
But you said with markets at near all-time highs, the Dow actually had its first close above 52,000 yesterday. With markets at near all-time highs, investing is a marathon, not a sprint. You want people to be patient and buy on pullbacks. What would you define as a pullback?
And again, I'm not looking at pullbacks broadly. It's going to be pullbacks individually. I think what happens is to wait for 10 or 20% pullback in the overall market. I'm not sure when you're going to see that, but you're seeing kind of these mini rotations where you're getting a pullback in some sectors. So like in AI, for example, everyone talks about, for a long time, we heard about power. Well, we haven't heard about that in a while. Those sectors have pulled back. Whereas now all we hear about is memory. So memory is probably the place you don't want to be adding lots of money to because it's trading at highs and the frenzy there. But other areas that are AI or AI adjacent, they've pulled back. And I think that's where you're looking as what are we not talking about? What's not getting attention is where the pullbacks are happening.
So you said you have to actually diversify away from some of those big stories, right? Whether it's Mag 7 or data centers or memory or, so where is the opportunity now as you're positioning for the back half of the year, for a better back half of the year? Where do you find winners now?
Well, I think when I look at it is the AI story is huge and encompassing. One of the things is it's not a U.S.-only story. I think people get that wrong. 40% of the data centers in the world are U.S. That means 60% are not U.S. It's a lot of opportunity out of the country. So there's a name, if we're going to talk individual names, I like Fabrinet, which is an optical name. And optical was hot for a while. Now we haven't heard about it in a while.
Yeah.
It's got double-digit revenue growth, mid-double digits, like 25% EPS growth, but it's trading 25% off of its 52-week high. Those are opportunities where they're kind of AI adjacent. They're going to help the AI companies, but at the same point, I'm not paying 52-week high, all-time highs for everything in the portfolio.
Yeah, I mean, and that's sort of a name that's off the beaten path. Do you have others that you like?
I do. When I look kind of at that space, and if we say an AI, Vistra is a name that was hot for a while.
Yes.
Energy, largest independent producer of energy in the country, 50 gigawatts. And obviously energy is a big problem for AI. Nobody wants a data center in their area. I mean, I was at ironically, a local city council meeting in Florida. I don't know if the data center is going there, but they're all vehemently, we don't want one. And part of it was the power and the water.
Right.
Well, Vistra solves some of that problem. Again, it's a good name with double-digit growth, both on the revenue and earnings, but it's traded off double digits. That's where I see opportunities, is not to chase the stuff that everybody's talking about, making new highs. Let's look for the things that have some staying power. They have 50% revenue growth in the next 3 years, yet the stock's trading at not a big multiple.
And now we're looking at data centers maybe being powered by CPUs, maybe not using as much energy or water, and I guess it's a work in progress. The AI revolution, how far along are we as you talk about the growth and you see the CapEx spending?
To me, it's probably second or third inning, simply because
so early on.
Yeah, we're still looking at picks and shovel businesses. We've not really done a lot of investing in the kind of the agentic AI. Who's going to use the AI to make more money? We're still in the business of selling picks and shovels to people going to dig in California for the gold rush. And I think at some point we'll start to look at who's going to use the technology to grow their business dramatically. But right now you can still make a lot of money in the spaces that are selling these things as the infrastructure gets bigger and bigger. Yeah. And again, not just domestically, overseas as well.
And you know, when you think about agentic AI, you said you're not even there yet with your investments. So you still have room to grow. What about moving away when you think about market breadth? And folks, you know, keep telling me, I really want all the sectors to participate. What other sectors do you look at closely?
Again, I think we're looking for the sectors that haven't participated as much. So healthcare is an opportunity that I think hasn't participated as much. We like industrials broadly. That's always been a good sector. But there's some selected discretionary names that are a little bit more defensive. You know, I like Burlington stores. We like all those treasure hunt type stores, but Burlington's one of those, again, double-digit growth, both on the revenue and the earnings side. It's not trading at kind of all-time highs, and it can't be Amazoned out. I mean, you've got to go to those stores to buy stuff, which I think is the attractive part of that business, is you've got to go, and there's not a lot of physical experience stuff that we do anymore. We want to do everything on the computer. That business, you've got to go, and I think that does well, continues to do well. And if we do have a pullback in a recession at any time, those stores hold up well.
So have your wish list ready, and when you see volatility or pullbacks, you jump in. But it sounds like you have a really diversified portfolio. We think about the yen at 40-year lows. We look at international markets. Have you been interested in international markets? I mean, what's the play there for the back half of the year?
Yeah, so we like the international markets. Part of it just depends on kind of where you are. We think it's again very spotty. You know, I think Japan's attractive, but a lot of times I'm looking at the individual names. And again, because AI is a global story, we're going to look at some of the tech names, some of the power generation names, some of the data center names that are in Europe that are going to supply the rest of the world. Because if nothing else, the last couple of years has showed us Europe kind of wants to buy more from Europe than they have in the past. So they're going to be looking for Siemens. They're going to be looking for the ASMLs to buy their own product from, not necessarily just the U.S.
You did say you think the Fed's going to stay on the sidelines. Why?
I think what's going to happen, I think earlier in the year when I was here, inflation was 2.5%. We kind of kidded. I thought I could get to 4.5% by Labor Day. I'm not sure we're going to get there. I think 4.25% is the top. I think the next print on inflation is going to be a 3.7, 3.8 number. And I think you're going to see threes for a while. So you're not seeing that hyperinflation where I think people were worried about, the Fed's going to be raising. I think one of the analogies is, I think Paul Samuelson said the economists have correctly predicted 9 in the last 5 recessions.
Right.
I think market participants have predicted 10 in the last 2 Fed moves. I think we expect too much from the Fed. We're not going to get it. I think we don't need it with earnings being where they are.
Very quickly, oil's at $70. And this morning I heard Iran, once again, I know they're doing the talks and the hostilities are put aside so they could talk more. Iran's very clear. They want to collect a toll on the Strait of Hormuz. Why is oil not moving at all? Are we done with the story?
I don't know if we're done with the story, but I think people have started to price this in. Oil's down 35% in the last month or two. So what's happened is, and you see that with the CRB index falling kind of off of a cliff as well, that's going to be a real effect to inflation, which I think is a positive. I think what's happened is I think people should kind of stay away from the geopolitical swings of the president tweeting, Iran saying we're not doing that, the back and forth. It's a fundamental story here is earnings are going to be up nearly 25% in the S&P 500. If you're paying too close attention to the geopolitical, you're going to miss the fundamental story, which is a very bullish story.
And you're more into that, it
Absolutely.
sounds like. Yeah, Michael Landsberg, Bennett, Private Wealth Management. Great to see you, Michael. Thank you for being with us today.